Hey, this is Uncle Dan. I'm reviewing a top 5 list of the biggest winners of a portfolio from a famous trader on Reddit. I've reached out to him and he's agreed to share with me some of his trading data. And what I'd like to do is to go back and try to validate the trades. Were they really done? And then look at the variables around the trades to see if there's anything we can learn from this. Now, he has a set of rules that he says he uses. And I'm going to look at these trades to see whether he applied his formal rules in those trades and whether that all syncs up. And then we can see whether we can potentially use some of his rules in our own trading if in fact we can validate that his trades are real. You know, as I always tell you, no matter how long you've been in the markets, you should always think of yourself as a student of the markets. You should always be trying to evolve your strategies. You can't have one set of rules forever. The markets constantly change and you have to evolve with the markets. So this is an interesting exercise for me. I'm doing it. I figured I'd go ahead and record it. You guys leave comments down below if you find this interesting as well. I'm just going to do the top stock today and then I'll see if you guys are interested in me documenting this and sharing it with you. If I'm the only one who's curious about this, then I'll just keep doing it for myself. But if you guys can benefit from it, I'm happy to record this, edit it, and then post it for you guys to share, and then we can use this as a means to kind of discuss different option strategies. So anyway, this is his top trade. It's in Amazon. You can see where the stock had traded down to 2,600, and then he came in on July 2nd, somewhere in this day, he came in and bought a call, and he bought a 3,100 call, and he bought a call 50 days out. And then he sold it somewhere on this day, July 8th. So he only held the position for 6 days, including a weekend, right? So July 2nd was a Thursday, held it over the weekend, and then sold it on the Wednesday. So he held it for less than a week, and he made, how much money did he make? And he made $379,000. Now that's a lot of money, but he also risked $301,000 on 40 contracts. That sounds crazy. That's a big number. So let's dig into this and let's try to find his trades, and then let's look at the characteristics around that trade and see if there's anything we can learn from it. In Thinkorswim, I'm using on demand. I've gone to a 1-minute chart back on July 2nd for Amazon. I'm looking at the 3,100 call, expiry August 21st. At first I couldn't find the trade because I was assuming it would happen in the morning where the price was here. But right on the close, 4 minutes before the close, there's a big spike. And again, there was no volume in here the whole day. And he did 40 contracts. So when I looked at all of these here, nothing was close to 40. So immediately I became very skeptical. I don't think this guy is for real if I can't find the volume against the price. Now there could be more volume, but there can't be less. So it's not a perfect science. But if the biggest trade of the day is 20 lots and it's at double the price he says that he bought, then I don't believe it's real. So I'm really trying to do is to validate data. You always validate data. You try to get 3 different sources for any information that you're looking at to potentially use in your toolbox. So, but look what happened right before the close. Here's his trade. And he did 40 contracts, but 41 traded at this price. So someone else did 1 lot as well. So sure enough, the buy on this stock looks real based upon my validation. Now we want to go and find the sale. We now come into July 8th. Set the on-demand for after the close. That way we can look at the 1-minute chart and look across the day real quick. What we see is that the stock closed up $81 on this day, and after hours it traded even higher. We're looking for the August 21st, 44 days out. We're looking at the 3,100 call. So we come down here to 3,100. 3,100, that's the put on the right, the call's on the left. So we come across to the left. Here are the calls, and here's the 3,100 call. It traded in a range of 146 to 175.66, okay? And then based on his spreadsheet, he sold it at 170. So was it within the range of 170? Yes. So now we're going to go see if we can find his trade. We're pulling up a 1-minute chart, and this is just happened sometime on this day. So we'll just look across this day, and here's the price, 170. So here we hit 170 in the morning. How many contracts? One contract. Okay, so that could not be him. One contract. So when you look across here, here's a big one. 46 contracts traded at 155. So that's not him. There's only one other spike on here. This is it. Here's the only other spike on the day. It's for how many contracts? 42. We needed 40. But now, the price that we're looking for is 170. And the range in this 1 minute was a low of 170 and a high of 171.18. And it closed at 171.18. So he actually traded the low price on that minute chart with those 41 contracts. So that means we can validate his first trade on his spreadsheet in Amazon, where he bought 40 calls on July 2nd and sold 40 calls on July 8th. He bought them for 75, he sold them for 170. And the net impact of that trade was, so he made $378,000 on that position over a period of 6 days. That's pretty impressive. $379,000 profit. Now he paid $301,000 for that position, basically more than doubled his money. That's a big trade, and we were able to validate that trade. So I'm just going to do one today and just post it, and then I want to see whether other people are interested to go through this process with me to really try to analyze what he did. Now, when we think about his strategy, now that we know that the numbers appear to be real, what can we take away from this? What can we take away from this trade? When he went in the trade on July 2nd, near the close, what was happening with the stock on that day? So this is what I like to do, is I like to try to get in the head of someone who is successful in their trading, knowing the markets are random, but also curious as to what external factors might have been happening. Now, the first thing I noticed is that the stock closed at 28.90 and he bought it 4 minutes before the close, right? So we know that the stock was slightly higher. The stock had made new highs. He mentioned like he does trade all-time high breakouts. He thinks that there's some continuation momentum when companies do that. And sure enough, the day before we saw a big breakout, and then we saw it trade a lot higher and come back down and close down. So it opened up on the day at 29.12 and came down and closed lower. So the one piece of data that we can look at is he said he likes to buy all-time new highs, and that does look like that's what he did there. So we have to think about that. How do we treat stocks that are making all-time new highs? Is there a momentum play when they break out above there? And obviously, if he had bought the day before, he would have been able to make a lot more money, or even down in here. The week earlier, if he had bought in, he would have made $1 million. He's not picking the bottom. He's buying up. But he seems to be doing pretty good in terms of where he's buying the option in terms of the day's range. What else can we learn from that? He went out 50 days on the trade. So I think one of his rules was 1 to 2 months. So that's right out there in 1 to 2 months. We also get to see what the implied volatility was. It's a 3100 strike. Okay, so he paid 35% implied vol, not 200%. So that's interesting. So the vols are relatively low. 35% is low. So he's found something that has low volatility that's breaking out to the upside. He's not laddering in. He's doing one big trade. Now let's go up back to July 8th again, and let's see what happened to the implied vols. Okay, so look at this. So with the breakout, the vols jumped to 42%. So he bought them at 35, they went up to 42, and the stock also jumped up. So that's a great combination when you're buying an option. When you're buying a call, the stock rallies big, and we can see in the chart over here, we can see how the stock took off, right? Where were we just now? So we had the breakout. This is where he bought, and the stock closed. It was a red bar on the day. And then the stock opened up a little bit higher, shot up, came down the next day, halfway, shot up again. So interesting strategy. It worked great for him. We'll stop with that for today. That would be his top winner so far. 379,000 on the day. So leave comments down below. What do you think of his trade? What do you think of his strategy? And if you'd like me to continue top winners, what are the patterns for his top 5 successful trades?